Hello, Brett Ellis with the Ellis team at Keller Williams down here in sunny Southwest Florida. So one of the questions we've been getting a lot lately is, where do you see this market going? Sellers really want to know because they kind of want to wait till the market peaks. They don't want to be homeless, but they feel like the market's getting a little toppy and they want to know, is now the right time to sell? So I'm going to take you through some data and analysis so you can make some decisions about what's driving this market. The first bit of advice I would give you though is, if you're home, if you're in love with it and it's working for you and you need a place to live, maybe don't sell it. But if it's not working for you, maybe now would be the time to sell it. If there's something about it you don't like, you'd like to upgrade, downgrade, move to a different area, different amenities, different floor plan, just worried about maintenance on the home, that sort of thing. There's plenty of buyers. It's a fun time to sell right now, but that could all change. So I want to take you through some analysis. So what I'm going to do here is share my screen. And here is what I want to take you through. I want to take you through 3 slides. So the first slide that I'm going to take you through is basically the history of mortgages. So the most recent data shows 5.97 is the interest rate. That's kind of the average since about 1990. Okay, if you go back and add the inflation years way back to 1972, it's 7.81. We ended the year 2021 at about 2.96. So if you'll notice, I'll take you through another graph here, but now rates are up to about 4.5%. They're going up. So that's going to kind of eat into home buyers' ability. Here's what I want to show you, and let me scrunch this down just a little bit so you can see it, hopefully. Well, if you look at October of 18, that's about the time period when rates were up here about 4.46%, and then they started falling precipitously. Now, what happened to home prices between October and January? Well, they went crazy, especially in the last year. So when prices bottomed down about January 21, it gave home buyers more ability to pay more, and it enabled cash buyers. They may have sold a property. They're doing well in the stock market. They may have sold a property in another state, and they came down to Florida flush with cash. But now look what's starting to happen. As of February 22nd on this graph, rates up to 3.69. We're telling you right now they're up around 4.5% now. So that affects homebuyers' affordability, which takes us to our next slide. So historically, not more than about 20.3% of a home buyer's total cost go to the mortgage, principal, interest, tax, insurance. And there was room for prices to go up because home affordability, back in 05, 09, that's when bottom prices cratered. So when prices came down, that's a big portion. Principal is one of the big 4, principal, taxes, and insurance. So, but now that prices are going up at the end of 21, we're already back to 16. So we've still got more room to go. But what's happening right now? A couple things are happening right now. Home prices are still doing very well. So that's the principal portion. Taxes aren't moving very much, but they kind of go up as the values go up. So they may lower the tax rate, but we won't worry about taxes right now so much because in Florida, they're pretty good. But the interest is going up. So remember, 1% rise in interest takes away about 11% purchasing power for a buyer. We've already seen the 1% rise. We've seen another 0.5% here in the last few weeks. And we're expected to see 6, 7 more interest rate hikes, and we might start seeing them in the 0.5% at a time come the April and May meeting. So rates could be another 1% higher than they are today, come May. So that's one of the big 4, and it's eating into this affordability. So when people ask me, what are prices doing? Well, kind of depends on affordability. Now you may say, okay, Florida, like Naples, 80% of the market might be cash. Here in Lee County, it's more like 40% of the market is cash. But where are those cash buyers coming from? They're selling something somewhere else. And if their ability is impeded by affordability, let's say New York, California, Illinois, New Jersey, Pennsylvania, then less people are going to be coming here with cash. It eventually always catches up with us. It may not be immediate, but these interest rate hikes do catch up with us. So forward thinking, we could enter recession. Who knows? If you have questions about that, go to our blog.topagent.com, and look at the article we wrote about the inverted yield curve. And we're getting down to like 0.18 spread. So if that gets down to zero, that's a very good indication we're probably going to hit recession going forward. I don't know if it'll be in 2022 or 2023. We haven't hit that yet. But interest rates are going up, and then you've got the war over in Ukraine, and Lord knows how that's going to turn out. So all I'm seeing is there are some wild cards on the horizon. Affordability is starting to get sketchy because as interest rates go up, these numbers are going to start going up. And if they approach that 20.3, we could have issues. Now, look back in the 80s when inflation went rampant. Look what happened to affordability. Homes were hard to sell back then. Interest rates went to over 20%. You had usury rates. It just got crazy. So we don't want to see that again. We want the feds to step on the gas and raise the interest rates now so they don't have to raise as much later, but they've been reluctant to do that. Don't know why. I think they're just trying to go along to get along, but that's not helping things. So you could see at periods of time, look at 05, when we got above that, what happened? Well, then we had a market crash. So we're not expecting a crash right now because we're still very affordable, but interest rates are going to start affecting that. And we want to be ahead of the curve. That's why if you've got a property that you own and you don't love it, now might be the time to sell it. If you love it, it's working for you, I wouldn't necessarily do anything. You got to have a place to live. And what are you going to do? Wait a year or two for things to change? And what if they don't change? I mean, nobody can predict the future. We don't know what's going to happen. Do we see some yellow lights in the horizon? Yeah, there could be. We did another article for buyers why even if the market does correct a little bit, you don't necessarily save anything because whatever you save on price that comes down gets eaten up in interest rates. So you don't save. The only peril right now I see are to homeowners who don't love their property, because if the price comes down and the payment goes up, the buyer's no worse for the wear. The only one worse for the wear is the seller because they lose $50,000, $100,000 on the price, 25, whatever the correction might be. So hopefully that gives you a better understanding of where we see affordability and where that could affect prices going forward. If you've got questions about that or would simply like to talk about your situation, give us a call. Sandy and I can be reached at 239-310-6500. If you want to speak to one of our buyer specialists, we're at 239-489-4042. And don't forget that blog. It's blog.topagent.com. Don't want the www, just https:// but blog.topagent.com. And you can read our weekly articles and you'll see exactly what's going on in the Southwest Florida real estate market. And you'll see where we see, the market kind of going. So hopefully that's a help to you. And leave your comments here. We'd like to hear from you. Thanks and good luck.
If you're selling or you're buying or moving right away, the Ellis team can help you. Call the Ellis team